Hey everybody, Jill Thomas here, and I'm so glad that you joined me again. I've got another professional here with us to share some information with you. I'm going through this mini series about getting control through COVID-19, and I know people are all at different places with this, and of course, one area that a lot of people are getting hit with is in their finances. So today I am honored to have Brent Campbell, who is a financial advisor with Edward Jones today, and he's going to share with us 3 points, 3 areas of things that we should or shouldn't be doing in regards to our finances. So first, thank you, Brent, for joining us today and sharing your expertise. And if you would first, just tell us a little bit about yourself.
Well, sure. Thanks for having me, Jill. My name is Brent Campbell. Been with Edward Jones in Sarasota for the last few years. And prior to this, I went to school at USF and did an MBA in sustainable business. So part of what I like to do is work with individuals and small business owners and just try to help them set out a roadmap for their financial goals like retirement, paying for education, and reducing taxes.
All right, perfect. That's good. That's good stuff there about your background there with your MBA. So let's just jump right into this. Share with us, please, what is going on? What is driving this recent market volatility?
Sure. It's kind of a combination of factors that sort of built into a perfect storm. Certainly everybody's aware of the threat of coronavirus and the spread of that, which has caused sort of a self-imposed economic shutdown.
Mm-hmm.
And everyone's kind of working from home. Kids are home from school, so that's halted a lot of productivity in the across all industries, really. Additionally, there was a oil dispute between OPEC and some other countries that has been resolved, but it did cause some market declines about a month ago.
Mm-hmm.
And then on top of that, just unemployment. People have been filing for unemployment. The federal government had to respond with the CARES Act, basically there to provide relief for small or individuals and taxpayers and small businesses, just to make sure that people are able to survive through this sort of unprecedented time.
Yeah. So I know you had shared with me before, you've got several things that you want to share with all of us in regards of what to do and what not to do. And I know as with my teacher background, sometimes telling people what to do is important, but also saying the reverse of it's also important. So that's great. So what's your first point? What's something that we should not be doing?
Well, there are some sort of investment basics, the general guidelines that people can broadly apply. This isn't really specific information for anybody, but
Mm-hmm.
the first thing is don't put all your eggs in one basket.
Okay.
Or really look for some sort of a get-rich-quick idea in a sort of an unstable market like what we've been experiencing. Instead of that, we try to promote diversification, building out a portfolio that has a variety of different investments in it that sort of balance each other out, and within your comfort with risk and the time frame for your investment goals, just provides a little bit more stability, especially when markets are volatile.
Mm-hmm. That's funny. Some of my friends and I, before when the stock market, went down significantly before, we were joking about, okay, which company should we invest in now? What's going to rebound here in the next, 9 to 12 months, as you're trying to look ahead. But I guess that's not the best approach, is just to pick those companies that we think are going to rebound significantly here in the next, whatever time frame, 9 to 12 months, maybe.
It's difficult to know what's going to be the most successful thing. What are people going to demand? I mean,
right.
We kind of want to promote quality investments over sort of penny stocks or things that really haven't had a proven track record of success.
Mm-hmm.
So when we talk about quality, we're looking at seasoned management companies that have predictable earnings that are, committed to growing a dividend if a stock offers a dividend. When it comes to bonds in the fixed income space, we're looking for bonds that have a high credit rating, AAA or AA, or something that's investment grade. Junk bonds have historically had higher yield, but maybe led to some problems in the past.
So you have to be mindful of all that. Okay, so that's good. So first thing, don't put all of your eggs in one basket and don't look for those get rich quick investments. So what's the second thing that we should be mindful of?
The second thing is kind of letting volatility and market swings paralyze your decision-making ability. We think that timing the market is not as important as time in the market. And for people who try to time the market and get in and out and take advantage of short-term fluctuations, they can really kind of erode their own growth by costing themselves commissions for one, but also they may not know everything that's going to impact the price of an investment, and could sacrifice some gain because they think they're making the right move. And really, they should have just stayed invested the entire time and let history, or let investments do their work. Over time, something that's predictable, that pays a dividend and can grow over time, you've got a pretty good chance of steady growth rather than getting rich or having a high return and then having to give some of that back either in short-term capital gains, tax, or just getting it wrong and getting out when the market's not cooperating.
Gotcha. So let's see. So just hang in there, and don't let yourself get too emotional, I guess, is the key thing there. And so then what's your third point that you'd like to make today?
My third point was that it always helps to have somebody to bounce your ideas off of. Doing this alone can be difficult if you don't have a method to it. And people tend to get emotional. There's confirmation bias when they've picked an investment that has done really well. They think that they can go and do that 10 out of 10 times. And, our biases are very powerful and can sort of convince us that something is a good investment when really maybe it's not, or maybe that company doesn't have a very strong competitive advantage and there's really nothing that's going to help them break out from the crowd. At Edward Jones, I don't do all of that investment analysis by myself. I rely on our investment policy committee and team of certified financial analysts and people who get to actually speak with the management of the different companies that we recommend. They do a lot of research, and then I kind of have sort of the all-star team to pick from.
That's awesome to have that backing there. It made me think of, like, when you apply that idea to real estate. We've got so many people that do for sale by owner, and just like what you were saying, sometimes you can do okay and you can be successful, but sometimes, or a lot of times not, because there's so much more involved in the whole process of buying or selling a home than what most people think. And then of course there's emotions, those biases. So I think it's kind of the same idea too. You may or may not be successful, and you may very well be and feel comfortable with it, but it doesn't always apply to every time. And across the board. So I think that is important to go to a professional and for that information and for that direction, because we are emotional people.
There are other mistakes that people can make too, or just sort of setting it and forgetting it is, that sort of aligns with a long-term buy and hold strategy, but you still have to review what you're doing. And we try to meet with people on a regular basis, at least annually, but if not semi-annually, or checking in over the phone, just to make sure that they're staying on track. And if you're goal oriented, it's a lot easier to hit that target than just saying, well, I'm going to throw some money into the market and hope that it goes well. So having a strategy in place, using tools like dollar cost averaging, where you put a set amount of money in on a regular basis, helps take some of the emotion out of investing. And that's really kind of where I think people trip themselves up the most, is when they let their emotions carry them away.
Yeah, no, those are excellent points. So just to kind of wrap this up for everybody, first of all, I just want to say, please, if you have any questions, call Brent. Obviously, this is very general information, and we didn't dig super deep into anything, but I just hope this is like food for thought for everybody, so you can maybe make better or more wise decisions during this time, because we are emotional and people are scared. So kind of slow the roll and think it through, and not just kind of like jump on board with some kind of fad or like we said before, the get rich quick schemes, or thinking that, okay, I can just do this myself. Call Brent and he'll talk you through it. And it doesn't matter, and I think I can say this, Brent, with confidence, that it doesn't matter if you've got just a little bit of money or you've got, more wealth. Give him a call. He will help you. He's not prejudiced based on, how much you've got to invest or work with, or even if it's something a little different, like we talked about before, even if somebody was selling a home and they're not going to buy for a while and they've got money that's going to be sitting there, instead of just throwing it in your savings account, call Brent, because he might have some other options for you to maximize, those investments. Is that not a true statement, Brent?
That's absolutely right. To
Okay.
your first point, no, I don't set any kind of account minimums when I'm working with people. More importantly, I like working with people who have a plan, who've sort of articulated their goals and want to work out a system to make those a reality. Even if it's, putting a plan together, it costs nothing except for time. We don't charge anything to put a plan in place, to give people a written report, or will they be able to achieve their goal, or are there sort of course corrections they need to be making now so that down the road they are able to achieve, buying a house or putting their kids through college. So happy to speak with anybody at any time. And certainly now, while emotions are running hot and there's still a lot of uncertainty ahead of us, I'd love to be a resource for all of your followers.
Thank you so much. And you do. You have a very calming effect, Brent. The way you speak, it's very calming. So that's good for people who who might be emotional. So I appreciate that so much. So all of Brent's contact information is going to be in the comments, or in the description of this video, or you can just contact me. I can put you in contact with Brent as well. And so I hope that this helped some of you out there to really kind of get control and think, okay, I need, during this time, like, again, this is what the series is about, is getting control and feeling like you can do something. So one thing you could do is give Brent a call and see what he may be able to do to help you. And then I think that will give everybody a level of comfort. So don't be shy, give Brent a call, and he's more than happy to talk to any of you. Well, thank you so much, Brent, for joining me today and giving us some direction here. And then again, for anybody else who wants to talk real estate, of course, I'm always here. And I would be happy to help. Real estate's still happening in Florida. It just looks a little different, but we're still doing it. It's an essential business. So don't be shy, and give me a call as well if you just want to chat a little bit. Thank you so much for joining us.
Thank you very much, Jill. I appreciate the opportunity.
You're welcome.